Hello and welcome back to this trader training video series. So what we're going to look at on this video is how to replace what you're already doing with options. So we're going to call this a stock replacement strategy. And all that means is we're going to take what we've done previously in perhaps the more traditional trading and investing, which would be perhaps to buy stock, and we're going to replace it with an option. So previously, if we were bullish on this stock, for example, we might have purchased 100 shares, 500 shares, 1,000 shares, whatever our strategy dictated, what we might have purchased. And the idea is that we're hoping to benefit from a bullish movement in this example. And if the stock was to rise, then we would benefit greatly. Again, traditionally, you would usually associate a stop loss with that. So we might put a stop order in the market so that if we're not right, then our risk is limited, and this acts as a certain amount of protection. So one of the big differences that we note from what we've done previously is that we don't need to put a stop loss in the market. And for the most part, a lot of people who use traditional stop losses might get quite frustrated with their stops being hit quite regularly, is because these stop losses are very often too tight, and that means that they're just a little bit too close to where they've entered into the markets, because they want this very low risk and a very high reward. So we actually get to do away with the necessity to have a physical stop loss in the market. So as an options trader, we get to benefit from the same bullish movements, but we've got a fixed cost. And again, in this way, it's kind of like a deposit. We've still got a fixed risk, but instead of managing our risk on the exit if we're wrong, should the stock go against our original idea, if we're wrong with the option, then it's no big deal, because our risk was defined on the entry. Because we're buying an option, let's just say that we spend $2 for this option. So we buy an option for $2 per share to control 100 shares. Then our risk is $200. That's fixed. That's not going to change. And one of the big advantages of options trading when we're replacing what we're doing with traditional trading is it doesn't matter how wrong we are. So from the risk side of it, it can drop $1, $2, $3, $4, $5, $10, $20. The stock can lose 50% of its value. And guess what our risk is? It's still only going to be $2 per share. It doesn't matter how bad things get, is really what I'm trying to get to. So we've got a major advantage there straight away. So if we think about all the times that you have placed a traditional trade with stock, and just think about all the times that you've been stopped out and had to perhaps re-enter the position or re-evaluate, or you start to question the validity of your research and analysis. If we can eliminate that stress of, did I put my stop loss in the right place? Am I going to get stopped out? What will the market do? Will it gap down favorably or gap up favorably? All these if, buts and maybes, these little stresses that go on in the back of our mind, we can get rid of those immediately by moving to options. And we can still get the majority of the benefits if we're right on our assessment, and in this example, if the stock goes up, but then we get none of the drawdown because our risk is fixed. And if a black swan event happens, guess what? Our risk is still fixed at $2. So we get the majority of the benefits, and as far as I'm concerned, none of the drawdown, simply because of the way that we're placing our trades. We're just adjusting the way that we trade them. Now, one new thing that will be obvious is that just like a deposit, we have a time element. So from the time that we put or place our trade, we're on the clock. We have a certain time to expiration, because we're buying an option. It's kind of like a deposit. There is a date when it will expire. So we have to make sure that we have enough time for our strategy to play out. And that's what we'll look at, and how to replace the traditional way of trading with stock and a stop loss and all the headaches and hassles that go along with that. And again, it's also very capital intensive, is something that we've not touched on. So the capital requirements are very much lower with options as well for what is effectively the same trade. So this is what we're going to look at. We're going to look at how to replace what we've done traditionally with an option, and it is very simple to do. So we've also touched on some of the benefits of why we might want to do this in the first place and start to use options as a speculative way of trading or investing. And with that said, I will see you on the next installment.